Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now first of all, a general disclaimer, this video is only for educational purpose. Please consult your financial advisor before investing trading. Now, friends, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that already since last couple of weeks, markets had corrected significantly from the highs of 19,991 and corrected towards maybe 19,250 odd mark. The lower degree charts were oversold, and we were expecting some sort of technical pullback from the lower levels. Again, last week was an expiry week, and we were expecting a zigzag movement, and we had clearly mentioned that it could be highly volatile, and traders should just try to catch small moves in Nifty and Bank Nifty, maybe 0.5% move in both the indices. And market behaved on our expected lines. And on Friday, we have seen that market ended on a positive note. So definitely the setup is positive at these levels. Anyhow, after many multiple attempts, 19,200 mark was defended at the lower levels, and from there we have seen a sharp pullback recovery from the lower levels. Friends, now let us check out the Nifty daily charts and we'll try to analyze what could be a trend for the next week. Now, you will see the Nifty daily charts. Now, this is the Nifty daily charts, and we have been discussing this charts a couple of months earlier, and it has been moving into a downward falling channel. So now here you can clearly see that it had given a breakout on 24th August, but it didn't sustain. Again, it pierced into. Again, it visited in between the falling channel, but again there was lack of follow up selling, and almost I would like to say almost it was a double bottom kind of formation made. You can see on 25th August, Nifty made a bottom of 19,229, and on 31st August, Nifty made a bottom of 19,223. So almost there is just a difference of 6 points. That is not an exact double bottom, but we can consider it as a double bottom, because on the very next day, I mean to say on Friday, we have seen a very sharp recovery in Nifty. You can see engulfing bullish pattern candle in Nifty daily charts. Um, that is clearly indicating that the trend has resumed. Last week was an expiring month, and currently we have entered into September series. So definitely, looking at this pattern, we feel that September series could be maybe on the positive territory, could trade in a positive territory. Now here I would like to stretch this RSI. You can see RSI is also given a positive signal from the comfortable zone. So definitely price and indicators both are showing that the markets are bullish or markets are turning bullish from these levels. So now friends, let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 19,323. Below that, the second support is placed at 19,223. And below that, the third support is placed at 19,024. Whereas on the upside, the first resistance is placed at 19,584. Above that, the second resistance is at 19,773. And third resistance is at 19,867. Now, these are the important supports and resistance level in Nifty. Looking at this pattern, we feel that next week markets might trade in positive uh, trajectory or positive trend. Any dips should be used to buy at the lower levels. This is what the charts are indicating. Now, friends, let us discuss derivative data of Nifty. Now we'll discuss the Nifty call data you will see on the screen. In Nifty calls, the action was seen in 19,500 calls, then 19,600 calls, 19,700 and 19,800 calls. Now here you can see uh, rise in the volumes, rise in the open interest, implied volatility is low. It is between 7.35 and 7.61. Percentage change of the option premium is slightly positive. So looking at this data, we feel that on immediate basis, 19,500 could act as an immediate resistance because the volume and open interest concentration is high over there. If it breaks, then there are chances that Nifty, this rally could extend till maybe 19,700 to 19,750 odd mark, at least for the next week. So this is what we have observed in Nifty calls. Now let us check out Nifty put data. In Nifty put, you can see the action was seen in 19,400 puts, 19,300 puts, 19,200 puts, and 19,100 puts. Now here you can see volumes are rising, open interest is also rising in some strike prices. Implied volatility is in comfort zone between 9 and 10.84. But the most important thing which I would like to highlight is the drop in the option premium. Now the drop in the option premium is clearly indicating that smart money uh, have been actively writing puts looking at this particular data, specifically maybe 19,400 and 19,300. So maybe on the downside, we feel that 19,300 could act as a very strong support. Maybe those, if there is a pullback, maybe 19,000 could not be breached. This is what the data is showing. But if it, even if it breaks, then maybe a couple of more points can drift down below 19,300. But looking at the charts, and the drop in the option premium is clearly indicating that we might see a rally from the lower levels. So looking at the charts and the derivative data, we feel that at least for the next week, the strategy should be buy on dips. Any dips should be used to buy at the lower levels. Now, friends, let us check out the Bank Nifty daily charts. In Bank Nifty daily charts, we have been discussing similar downward falling channels since last couple of months. It has been moving. It has given a breakout. Currently, it is moving out of this particular falling channel. And again on Friday also, you have seen that Bank Nifty has also formed an engulfing bullish pattern. Now here, if we see the oscillators front, it has already given a positive crossover from the particular lower levels. So definitely these are the good signs for the market. And looking at this data also, we feel that the next week in Bank Nifty also could be a positive trend. So we feel that any dips should be used to buy at the lower levels. Now, friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 44,200 is the first support. Below that, the second support is placed at 43,380, and below that, the third support is placed at 43,600. On the upside, the resistance is at 44,779. Above that, the second resistance is at 44,944, and third resistance is at 45,238. These are the important supports and resistance level in Bank Nifty, and definitely the trend seems to be positive looking at the Bank Nifty daily charts. Now, friends, let us discuss the option data of Bank Nifty. You will see the Bank Nifty call data. In Bank Nifty calls, the action was seen in uh, 44,500 calls, then 45,000 calls, and 45,500 calls. Now here you can see there has been a rise in the open interest, rise in the volumes, slightly rise in the option premiums. Implied volatility is in comfort zone between 8.31 and 10.20. Looking at this particular data, we feel that 44,500 could act as an immediate resistance. If it breaks, then there are chances that Bank Nifty might rally towards the level of 45,000, and above that, the next resistance might come to 45,300. So the Bank Nifty call data is also interesting. That is also showing bullish signals at this juncture. Now, friends, let us discuss Bank Nifty put data. In Bank Nifty puts, the action was seen in 44,200 puts, 44,000 puts, and 43,500 puts. Now, here, most important thing which I would like to discuss firstly is the significant drop in an option premium. Volumes are rising, open interest is rising, but there has been slightly rise in the implied volatility. It is between 11.35 and 13.46. Now, the most important part is the significant drop in the option premium. That means smart money has already into action of writing out of the money puts, which will propel the market from this level on the upward trajectory. So definitely the markets, I mean to say Bank Nifty is bullish. Any dips should be used to buy at the lower levels. Immediate basis, 44,200 could act as an immediate resistance. This is what the data is showing, and above that we might see. Sorry, 44,200 is the immediate support, and if it breaks, then only there are chances that there could be a further slide. But looking at the overall data of charts and overall data of derivative statistics, it is indicating that next week could be positive. Any dips should be used to buy on the lower levels. Now, friends, let us come to the final segment of our show, which is positional call. The stock which I have identified is from FMCG sector. The name of the stock is ITC. Let us discuss the charts and analyze what could be the trend in ITC. Now, this is the daily chart of ITC. ITC, you can see the stock is already forming a downward falling wedge. You can see RSI is also slightly rising, though it has not given any kind of positive signal, but the stock is on the verge of a breakout. You can clearly see when prices were making low tops, RSI is making lower high low. It is a classical example of positive divergence. So stock is on a verge of a breakout. So long-term investors can accumulate, or short-term investors, positional investors, swing traders can accumulate the stock in the range of 441 and on corrections to 435 for an upside long-term target of 500. So definitely the stock is looking good at this juncture. One should have this in an investment portfolio for long-term investments. So thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.